G'day everyone and welcome back to this Hidden Gems ShareCafe webinar. Always appreciate your Friday time. Nothing really from us today other than there's plenty of rumours circulating out of the West in regards to hot copper and the market herald. So let's keep an eye on that. We're going to make a start straight away. Don't forget to ask questions. Type in the Q&A box provided and we'll get to those questions one way or another. So let's make a start with IOU Pay, ASX code IOU, of course, market cap around $27 million. We have with us Paul Russell, who's the Executive Director. The company provides fintech and digital commerce software and services in Southeast Asia that enable institutional customers to securely authenticate end user customers and process banking, purchase and payment transactions. Paul, thanks for your time. Over to you.
Thanks very much, Tim. It's great to be here. The presentation today is largely an extract from our business strategy update, which we announced on the 21st of July this year. So if people want to look at some more detail, they should go refer back to that and our other announcements. If we just start on slide 3, IOU Pay is a fintech business listed in Australia, but based in Malaysia. We've been operating for nearly 20 years, providing secure digital payment processing for banks, telcos, and major corporates in Malaysia and Indonesia. The company is focused on large communities of low-risk consumers and merchants, which has led us to establish a highly scalable, market-leading BNPL platform servicing Malaysia, and we're seeking to expand throughout Southeast Asia. Our goal is to be one of the leading digital transaction processors in the large and growing cashless economies of Southeast Asia. Next slide. Over its 20-year history, the company has established a number of core capabilities that set the foundation for successful growth. We have developed a trusted and secure technology platform, a highly targeted customer acquisition plan, and specific digital marketing strategies. We have a sophisticated credit and risk management system and an experienced senior management team with expertise in wholesale debt funding, corporate finance, and M&A. This has led us to a number of highlights and achievements over the past 12 months. Next slide. IOU's base business continues to perform strongly, reflecting the fundamental shift in consumer behaviours towards digital transactions. There are now over 350 million digital consumers in Southeast Asia, and this number continues to grow. However, credit is difficult to obtain, which is providing opportunities for BNPL and other consumer finance products. As a result, the company has launched its My IOU BNPL service in June 2021 and made a strategic investment in IDSB, one of Malaysia's largest finance companies. IOU Pay is focused on product innovation to maintain market leadership, provide access to new customers, and to develop new revenue streams. Next slide. The business is very much focused on a measured approach to sustainable growth.
You there, Paul? You seem to have frozen screen by any chance? Looks like we may have an internet issue there. We might look to move forward. Let's make a start. We'll go to IntelliHR. Okay, next up, we've got IntelliHR, got an ASX code of IHR, market cap of around $20 million. We've got Matt Donovan with us. Hopefully we have Matt Donovan with us, who's the Executive Chairman. The company is an intelligent people platform empowering global HR leaders to create an inclusive, engaging, performing and aligned working culture. Are you there? Thank you for being available, Matt. We had some technical issues. Over to you. Thank you.
No problem. Thank you for the chance to present IntelliHR today. If you could just go through a couple of slides here. So for those who don't know IntelliHR, we are the intelligent people platform that empowers HR and business leaders to make more intelligent people decisions. Move forward one. What we help businesses do is to bring people into the business, keep them in an area of profitable performance as an employee, help you identify if there are moments where that employee needs to be re-engaged and can be turned around and returned to a more peak performance within the business, or help you offboard people from your business if they're becoming unprofitable in the way that they're contributing to the business. If you can go forward one. So IntelliHR is a next generation HRIS or HCM. You'll hear both of those terms in the market that puts people and culture at the core of a business. I think we've all seen through COVID the return of the importance of having people right at the heart of your business strategy. And what we do is we come into a business and we can sit and pull the data from your productivity tools, your payroll system, your hiring and recruitment system, your learning and development tools, and create for you a single source of data truth on every employee in the business. The pillars of the product, it's built around intelligent, human, empowering, and secure. We're a business that was born of HR. We were born in Brisbane in Queensland. We now have people in a number of cities, Melbourne, Auckland, London, Manchester, Toronto, and Sydney, where I am. But it's a business that's built on analytics and visualization of data. It does the core HR functions of engagement and performance to allow you to connect to people, onboard your people, help managers manage people across this new hybrid working world that we're in. And a key of our product is it's very flexible and configurable. So a lot of the products out there require a business to work the way that they've decided is the way to work and that their system enforces as a process. With IntelliHR, we can actually help you configure the product to the way that you want to work. A number of our customers have distinct cultures that they want to support through the way that they manage and engage and understand the performance of their people. And so our product is incredibly configurable, allowing them to work the way they want to. It's built to be a global platform. We have a number of customers in over 20 countries, and we have a number of languages on the platform, and that keeps growing as we get customer need and demand. If you could go to the next slide, please. So while us and most of the competitors in this sector are well off their 52-week highs, the underlying drivers that have been powering this growth in HR tech continue. Key among those, obviously, is digital transformation. HR is one of the last groups to really come to the digital transformation time. I spent 8 years at Microsoft in Redmond headquarters before coming back to Australia, and I was responsible for the Office 365 business. And what we saw is that digital transformation started first in finance and sales and marketing and all of these other frontline groups, but HR was left a little bit behind. But that's really hitting the HR market right now. Certainly, hybrid working is the new normal. We've come out of, we're in a post-COVID era. A lot of businesses are trying to work out what to do. Do they maintain these large real estate leases? Do they embrace people working from home? What's right for their business? And businesses are coming up with their own combination that makes best sense for them. And we can help empower any of those businesses because our product allows you to stay connected and understanding both the productivity and the well-being of every employee in the business. We've also seen the rise of the CPO, and it's something I saw in technology back in the 90s with Y2K, where we went from an IT leader to the creation of the CIO role. We've seen the same with COVID and the creation of the Chief People Officer, now responsible for people and culture in the business. This is Kathleen Hogan, who I worked with at Microsoft, and it's certainly a role that is starting to, and will spend the next 10 years, carving out what its areas of responsibility and functional responsibility and accountability for businesses will be. And I think we'll see some evolution there. And that's great for our business because we've built a platform that can continue to innovate and keep pace with those leading HR people and what they need out of a platform like ours. And certainly, we're also seeing businesses try and work out how to build a performance culture when they can't have all their employees in one building, when they can't see them regularly. They're managing them across remote and hybrid styles. And so there's a new algorithm of the workplace, and it's built around being employee-centric, having a clear understanding of aligned goals between the business and the individuals of the business, having agility and being able to move and change with the market, with their own business conditions. Engagement is primary, and giving managers who've learned how to manage people in a room the tools and the skill sets to be able to manage people who they may only see once a month is very different today. Well-being and performance being the ultimate outcome for the business. Next slide, please. So last year was a good year for our business. We had a 97% growth in our ARR, a number of fantastic brands and businesses that have chosen IntelliHR. In our last quarterly report, we noted that we're at 8.37 million ARR at this point. Our key focus for this fiscal year is both getting to 10 million and beyond 10 million ARR, and to start to reach an operating cash flow break-even state. We have more than 330 customers in 20 countries, more than 78,000 headcount on the platform now, and a large percentage of that is offshore. We do have a number of customers in North America and the UK, and continue to grow both of those businesses as well as here in the home market. And you can see from these brands with Mitre 10, with SwiftX, who in the cryptocurrency, largest cryptocurrency exchange in Australia, Baby Bunting, an amazing law firm, Lander and Rogers, OSL, a huge retail services business, 8,000 headcount over in North America. Scope, of course, here in Australia, Discovery Parks. ShareCafe is interesting because when we win things overseas, local investors don't always know how to understand those. ShareCafe is twice the size of Hoyts, so it's a big cinema chain group. Obviously Dake in the industrial area, and the fastest growing healthcare brand in Australia, MyHealth. So you can see we're across a number of categories now. So it's been great to pressure test and innovate the platform together with HR leaders across a whole range of different business conditions. Next slide, please. It's also been pleasing to receive some global customer and thought leader recognition recently. Jason Aberbrook on the left there is one of the two leading HR tech thought leaders in the space, Josh Burson being the other one. And Jason, we've taken through the product at depth, and certainly he really appreciates the core intelligence piece to our product, of the analytic capabilities, great visualization of data, and being able now, through work we've been doing in the UK with a partner, a payroll partner there called Sintra, we can now actually sit in front of payroll, and we can push data to payroll and be the first point of contact and the onboarding mechanism for both payroll and HR, which is pretty unique. And then G2, which is a very large independent review site in the US, about 5 million B2B shoppers a month come to their site and leave reviews. And so our customers have been leaving reviews, our competitors' customers have been leaving reviews, and we're really pleased to see the hard work we've done to please our customers, to be recognised as a global momentum leader for the first time, which is really big for us. And you can see a number of other great awards there. I think our analytics was the global easiest to use from an analytics perspective, and a number of Asia Pacific, Australia recognitions as well. Next slide, please. How we're positioned, the way that people think about us is represented here from very basic capability systems to more enterprise capability, and from quite expensive to more affordable. When customers see us, they see something that they can achieve enterprise capability, but at a mid-market price. And certainly from a capability perspective, we're incredibly customizable. We integrate with all number of systems to make it really simple when you bring us into your business. It doesn't mean ripping out a lot of other tech that you're wedded to. We have very advanced analytics up against a number of the global leaders, and certainly speed to value. We can get a customer up and running really quickly. Mitre 10 is a great example. Our competitors were quoting 9 to 12 months. We got them up and running in less than 6. If you go to the next slide, it's pretty unusual for a business of our micro size to be winning against some of the world's biggest, most well-financed players, but we have been in the last 6 months alone. We've won customers up against each of these people here, and our customers have told us that these reasons around the single source of truth, the enterprise capability, the implementation speed, that we're truly a cloud-first solution with really easy data flows across the system, and really good deep insights. On the next slide, a great example of that is we're looking to create this next generation of proactive people leaders. So with a lot of the competitor products, if the CEO wants to know what's going on with attrition, the HR leader is able to tell them the attrition number because they're basically a reporting system. Our system, however, is an intelligence system. So the same customer using IntelliHR can tell them the attrition number, can tell them the 4 or 5 key drivers that are creating that attrition, can show what parts of the business that attrition is likely to happen next, right down to the individual employee level of people that managers might want to reach out to and connect to ensure that attrition doesn't happen when they don't want it to. So a really deep intelligence-based, machine learning algorithm-based set of insights that our customers really love that they get to have. Next slide, please. So just to finish on where we were at the end of Q1, as I mentioned, 8.37 ARR, up over 78,000 headcount on platform. And one analyst a few weeks ago was calling us a baby Elmo because Elmo's obviously been in the news. And I think that's down to a couple of things. If you look at the average customer ARR of about 25,000, Elmo's somewhere around 27,000, so they're quite similar there. While they're 10 times our size from a revenue perspective, we do have excellent churn of less than 1%. I think their business is up over 10% in that regard. So a really interesting business, really excited to be able to share it with you today and open for questions.
Thanks, Matt. Just on Elmo, we've seen a number of Australian technology platforms kind of subject to takeover bids, which is probably quite rare. What do you think is kind of attracting the offshore player to look at technology platforms like yours, for example?
Yeah, it's a great question. I can tell you when I was sitting in headquarters at Microsoft that we were looking at Australian tech all the time. And I think that's because Australians have a really good way of identifying a real insight and need that people have, and a really good way of addressing that in a simple way from the beginning that can scale. And so I think that attracts a lot of overseas investment, and people are waiting to see when those businesses reach the right level of scale, they're looking to swoop in and find ways that they can acquire those assets. So it's not surprising to me. I know that when we were there, we looked at a number of now very well-known unicorns here in Australia, and we looked at whether we should acquire them or not. And so I think Australia is definitely a technology hidden gem, as today is called.
There you go. Thanks for the plug. So is the platform disrupting something in the market, or is it the emergence of work from home and this performance culture and the ability to measure performance? Is that where the focus really is?
Yeah, it's a great question. I think what we used to look at was with Office was the first generation of Office was digitizing human behavior, and that lasted for about 20 years. The next phase of Office was, well, once everything's digitized, what do you do with it? And I think IntelliHR has looked beyond where a lot of our competitors are today, where they've been acquiring different capabilities in the area of digitizing the HR workflow. And they're based in an area of reporting numbers, which is good. And that helps HR, obviously. I think where we've gone is the next step. We're already in phase 2, which is, well, once it's digitized, what do you do with the data? And so every different app or business that we're able to integrate with feeds data into the platform and makes the platform smarter. It allows us to give the HR person deeper insights based on the range of different data inputs that we have, as well as allowing them to do the basics of HR, onboarding people, engaging people, running performance management, and so on. So those core functionalities are still covered in the product, but we have this extra layer that I think is pretty interesting to customers.
And Matt, are we talking about a SaaS sort of subscription product model here? What's kind of the average subscription? You may have touched on that, sorry. And let's go from there. And then the pathway perhaps to kind of cash flow positive. There's a question in that regard.
Yeah, definitely. I think on the first piece, we have a tiered product. It's definitely a SaaS product. We have monthly subscription or annual subscription that the customers can pay. We implement the product and configure it to you. So there's the ability to both configure for a business that is trying to utilize bringing in a piece of technology to help them change their culture, we'll instead help them through design workshops understand what they want their HR and people management approach to be, and then configure the product to that. So there's that implementation piece as well, where we also earn revenue. From a pathway to operating cash flow break even, I think there's a few things. When I entered the business about 2 quarters ago, the business was driving demand through paid digital marketing, and that's a pretty time-honoured tradition for small SaaS businesses to spend their way into the marketplace. What we've done since then is to open up our ability to do organic marketing. We've rebuilt our website from the ground up to be far more search engine attractive. That goes live this weekend. And then opened up a partner channel. We've started to build partner relationships at the reseller and at the consulting level, who are looking to build potential their own services around our product. And so there's a partner drive for us at the moment. And then we have a number of innovative, experiments. One of the key ones that our investors who've been with the business for a while would know is with a big payroll provider in the UK called Sintra. And we've created a product together called Sintra HR, powered by IntelliHR. And that's a joint payroll HR product that we're marketing in the UK market right now. And I think that's pretty exciting. That's taught us a lot about payroll. It's taught us how to sit in front of payroll. And I'm certainly talking to a number of payroll providers now to see if we can create interesting products to take to market together as well.
Yeah, it's really interesting that we've had Pay Group on in the past, who are payroll group and a platformer who got taken over. So a good way to finish the conversation. But thank you for your time. Have a nice weekend, and we'll get you back on next year.
That'd be great. Thank you very much. Thank you, everyone.
Thanks, Matt. Next up, we have Melbana Energy, market cap around 145 million, ASX code MAY. We've got Andrew Purcell, who's the executive chairman. The company is an independent oil and gas company that has a focused portfolio of high impact exploration, appraisal and development stage opportunities in Cuba. And I'll let you pronounce that region in Australia. Thanks, Matt. Over to you. Thanks, Andrew.
Thanks very much, Tim. Good to be here with you all today. Yeah, we've been on the ASX boards for over 20 years. We're unashamedly an oil and gas explorer, but we have a very exciting transition in front of us right at the moment. If I could jump ahead a couple of slides, please. What we have on the plates at the moment is a great team, and that team is what has been responsible for bringing us to where we are today. Now, at this point in the world where we're going to transition from being an explorer to being a producer, we hope next year, and at a time when energy prices around the world are very favourable, and in my opinion, unlikely to get any better in the near future. So we've got a good combination of skills, from operational to finance to oil and gas, all with tier one oil companies, investment banks around the world. And we've got plenty of cash in the tin. And that's the other good side of it. Everything that we now need to do, we've got good partners, we've got good cash. We don't need anything from the market here to deliver on the promise that we have been putting forward for the last couple of years. Ahead, please. What we have at the moment are 2 principal project lines to look at for next year. What we're doing firstly in Cuba, which is a jurisdiction that's unfamiliar to many people in this part of the world, is that it's important to recognize that Cuba is part of the Gulf of Mexico, one of the world's great hydrocarbon zones. And we have been in there for 5 years. We've got a very large block. We have just completed drilling our first 2 exploration wells just last month. What we have found this year, as I'll talk to in a moment, has been substantial discoveries onshore of oil. But we'll move into appraising that very shortly. But in addition, coming up next year, we have a very large interest in a very exciting well being drilled offshore Australia. That if that comes in, is going to be also very remunerative for our shareholders. Forward, please. The first well that we drilled earlier this year, that ended up finding 3 independent reservoirs of movable oil in the one well. stacked vertically. The combined column of oil that we found was net almost 300 meters of oil. These sort of extents of discovery on shore are rare. And if I take you through to the next page, it'll probably start to put it in perspective of what those numbers mean. We took that discovery, we gave it to independent experts who have been operating in Cuba for a long time for other companies, a Canadian group. And what they have established for us is an estimate of a 6 billion barrel oil in place estimate, of which they think we're going to be able to recover about 267 million barrels, best estimate. That makes it one of the world's great oil discoveries, onshore particularly, in the last decade. We have that under our belt. We're the operator. We are running this drilling program. Our partner is the National Oil Company of Angola, Africa's second largest oil producer. So they've been paying 85% of the bills for this exploration program. We paid 15%. And as operator, we were able to control costs and keep the pace of the program running. And next slide. And if I look at what we're about to do, we're preparing now to start the appraisal program. Having explored and found so much oil, what we now do is appraise it to determine the flow qualities, the reservoir characteristics, the quality of the oil. And we have 2 wells permitted and approved and funded to take place starting in Q1 of next year. Those 2 wells will, if the appraisal program is successful, be put onto immediate production. We're already geared up with tanks and trucking to allow that oil to go to market. So we're not talking a multi-year, how do I take a good discovery with good production characteristics into commerciality? This is all ready to go. And we're on an island. So it's not like Australia, we have to build a 500-kilometre pipeline to take a discovery to market sometimes. We're 50 kilometres from a deep water oil terminal, an oil battery, and a lot of oil field infrastructure, because Cuba produces about 50,000 barrels a day of oil around us. So there's a lot of existing infrastructure in the country already. So these 2 wells will take place starting early next year. And this has been the end of a long road for our shareholders. And when we made that discovery last year, early last year in that first well, our share price was 4 times what it is now. And with the headwinds of the world and the delays of getting back to appraising it, and the inflation scares in the market, our share price, like all junior explorers, has taken a battering. But I would take the opportunity to remind people listening, this is a hotly demanded commodity in the world today. There aren't endless new supplies of it coming on stream because it's very, very difficult to fight the ESG headwinds around the world in developed countries, particularly in getting new supply online and getting it online quickly. So to have a major discovery under your belt on an island, close to infrastructure, with the company and its partners well funded for an appraisal program that can bring oil on very soon, makes this an incredibly exciting opportunity, which we've already seen the potential of, given our share price over the last 6 months. Next slide, please. In addition, our job has been to find and advance good exploration opportunities that we have then gone and found international partners to help us fund the drilling of. We've been very good at this over the years. And then one such opportunity that's coming into focus next year is a large carbonate buildup offshore Northern Australia, shallow water, quite close to Darwin. These carbonate buildups are a new play type for Australia, but when they've been tried elsewhere in the world and when they've worked, they tend to work very big. And that's why this is such an exciting play. We were successful in getting a Houston-based oil company, a $60 billion Fortune 500 oil company, interested enough in this project to buy it off us. late last year. So they're making a country entry into Australia to drill this one well because they know, like we know, when these things work, they work big. And the independent assessment here is that this could have up to 1.4 billion barrels of oil or equivalent right on Australia's Northern Shore doorstep. A good jurisdiction, good fiscal terms, very sizable prize for a company of that size. They paid us $7.5 million US cash up front to take the license. We have an ongoing interest in their success. They'll pay us more cash, another $5 million, subject to certain terms. But the real prize for us is that they are successful and start producing from this field. They will pay us $10 million US for every 25 million barrels produced. And as I said, it could be up to 1.4 billion barrels, we think. And we don't have to pay another cent. We just sit back now, let this big oil company do what it's going to do. And if it comes in, we just sit there and we'll gratefully receive checks. So this, with Cuba happening next year, for a company of our size and our cash position, we have de-risked the portfolio to an extent at a time of great demand for energy. It's a very exciting runway ahead. Next slide, please. Thank you very much for your time. I probably got through that nice and quickly to leave a few times for questions, Tim.
You did. Thank you, Andrew. You've got a big retail following from what I can remember. Have you attracted any institutional attention?
Yep, we got some instos on the register when we did a raising back in March of this year, but it's less than 5% of our register at the moment.
Yeah, it looks like as you said, there's an incredible footprint and story here. I'm surprised it hasn't attracted institutional support. That said, you've got some operating partners. Can you talk a little bit about what the deal is with your funding partner in Cuba moving forward? You mentioned 6 billion barrels. I think that's correct. Moving forward, how does that work in terms of profitability and profit share?
Well, the agreement we have with them is that we're 30% of the license, they're 70% of the license. For the first two wells, there was a different deal. But going forward, we are on what's called a heads-up basis. We pay 30% of the bills, they pay 70% of the bills. And that's the same percentage split on the production and the benefits that will accrue from producing oil.
And can you talk us through kind of your timeline to production? How long is this going to take?
We could, here we are in late November. I've got my team working hard. We've just released the rig from the end of the exploration program. It's going through maintenance and recertification, blowout preventers and key components, safety testing, doing a bit of civil works. Short answer is I hope to have the rig back and spinning in February of the new year. And the first well is very shallow. It's only 1,800 meters and we just drilled it. So we know what we're drilling into. It'll be quick, a month quick. And when the oil starts flowing there, we'll let it flow. And the Cubans are very keen to have oil. So if the appraisal's successful, if the flow rate is good, and for those who haven't been following our story, when we drilled that well last year, that flow came at us under pressure. It was very exciting. So let's see how it performs. Let's start putting it out into tanks and start exporting it.
And you spoke about the infrastructure, the existing infrastructure there and an existing industry, oil industry in Cuba. What's the kind of political environment like for an outsider, so to speak?
Well, Cuba's implemented foreign investment laws back in 2014 that have encouraged foreign investment, and it's been a very good place to operate. My background, I had a long time with Credit Suisse, doing emerging market resource projects all over the world. So I have had some skinned elbows in my time in some jurisdictions around the world, and this one doesn't give me the heebie-jeebies at all. They're a very, very professional, well-educated, competent regulator and political environment. They're very keen for the foreign investment. They have a lot of headwinds for their economy because of the amount of money they make from tourism, and the COVID stopped the tourists coming. They're needing to import oil to make up the deficiency in their own production. And because of the historical relationship with the US and the people who do come in and who do operate there are treated with golden gloves. So I find the jurisdiction very effective and very able to be worked in.
And the strategy here is, excuse me, is for your Australian assets to kind of produce cash flow to help you in Cuba. Is that how it works? And if you...
Yeah, no, fair comment, but no, I don't need one to subsidise the other. They're both, Australia's an exploration opportunity we don't have to write another check for. The Americans are writing that check, and if they're successful, we'll sit there and take the payments they are going to give to us. So that's tremendous. Cuba we have our funding already sufficient for Cuba to do these appraisal wells. And if they're going to be successful, these appraisal wells, which are a very good confidence in the performance we've seen in the oil already, but they will be, then that will be a revenue stream for Cuba. And we'll keep the two things separate and run two different businesses, Australia and Cuba.
And I mean, ultimately, if you get to this very successful stage, you're going to attract the attention of big oil at some point, aren't you?
At this size of a discovery, exactly right. Well, we've got, as I said, a major national oil company as our partner already. The 6 billion barrel find that we've made, how much of that is economically recoverable? The independent expert said maybe 400 million barrels of that. I'd be delighted at 400 million barrels, and so would our partner. That's a globally significant resource to have found onshore. But there's good reasons it could be more.
And so that equation, when do you find out, or when do you get to a stage where you can work those numbers harder to be more accurate on the scale of 400 million to 6 billion?
You're going to know starting first quarter next year, and maybe by the second quarter, we've then given you even more confidence because we've run the flow tests for a period of time. And as you watch declines in how the oil produces from the reservoir, and you then shut it in and let the pressure build back up, and then watch what the profile is again, you can take that last piece of data and marry it with all of the volumetrics that the independent experts have done to say, you know what, the 400 million barrel looks like being plus or minus X. And that's when you have confidence in the number.
Andrew, thanks for your time. Good luck out there. Good luck first quarter next year. We'll follow with interest.
Thanks for your time, Tim.
Thank you. If you're looking for IOU, we're going to have them present in fourth part. Now, next up, we have Encounter Resources, ASX code ENR, market cap around $74 million. We have with us Will Robinson, who is the Managing Director. Encounter Resources engages in the exploration and development of mineral deposits in Australia. The company explores for zinc, copper, gold, and cobalt. Will, thanks for your time. Over to you.
Thanks, Tim, and thanks to all the viewers who are tuning in this morning, particularly the Encounter Resources shareholders. Encounter is focused on discovering copper, gold, and rare earths in Central Australia. There's a huge opportunity that's emerging in Australia at the moment for a whole lot of commodities that are in very hot demand globally. Can you go forward 2 slides, please? That's just a snapshot of Encounter. We're one of the largest exploration landholders in Australia. We've targeted on 3 major regions in the Northern Territory, in the West Arunta in Western Australia, and the Paterson Province, also in Western Australia. We're well funded to complete our exploration plans on our 100% owned projects. We've got some terrific partners with BHP, South32 and IGO partnering on projects and providing funding support to those projects. The board itself, we've got Paul Chapman. He was very successful as the founding chairman of Silver Lake Resources. Took that to $1 billion company. Philip Crutchfield was the founding chairman of Zipco, and he took that to $1 billion company. We also got 2 of the leading geological minds of the generation, Dr. John Ronsky and Peter Buick on our board. And Dr. John was awarded in the Order of Australia for his services to geology in Australia. And they really have helped design and build what is one of the largest exploration portfolios for copper and rare earths in Australia. We've got a register that's about 20% institutional. We've also got IGO and Silver Lake Resources on our register, 2 corporates, and the board and management still holds around 14% of the stock, giving us skin in the game and alignment with our shareholders. You just move forward. So this is a summary of the project portfolio, really split into 2 main categories. About half the portfolio is funded in partnerships with some of the leading resource companies in the world, BHP, South32 and IGO. And that's projects that are BHP and IGO have just finished drilling, and South32 is planning to start drilling in 2023. We've got a large portfolio of 100% owned projects, and I'm going to spend most of the limited time today talking about the West Arunta, because this is a new mineral province that's emerging in Australia and it could have national significance. Next slide, please. It really is a fabulous time to be in mineral exploration in Australia, and particularly for the commodities that we're looking for. Copper, no matter what sort of scenarios you look at, is desperately undersupplied in the next 20 years. When there's much copper to be found in the next 20 years, as we've used since the dawn of mankind. So, look, copper, rare earths, lithium, all those commodities that are going into the electrification that's happening around the world, and Australia and Encounter's right at the forefront of that, working with some of the leading companies in this space, trying to find new sources of these commodities in Central Australia. Next slide, please. That's just a summary of what's been happening recently. There's been drilling happening in the Paterson province on our 100% owned Lamel project. IGO has been drilling at our Yanina project, also in the Paterson province. I won't talk about them today. We've got work commencing on our lithium projects in the Northern Territory. We just completed a gravity survey at our Sandover copper project in the Northern Territory. BHP's just finished a drill program, and they'll be reporting results early in the new year. But today I'll talk mostly about the what's emerging in the West Arunta region of Western Australia, where it's very early stage. It's a new district. Where ourselves and WA1 have been finding new rare earths and niobium under thin cover in what looks like a new province for Australia for minerals. Next slide, please. Yeah, so this is what I guess we said. It's a focus for copper and rare earths in Western Australia. I think that's going to be of global significance if things keep going in the direction they're going. Next slide, please. That's our land position. Now, one of the things that when we are targeting new areas, and we are at the forefront of a lot of the frontier areas for mineral exploration in Australia, is that we like to have large land positions established early on. We moved into this area in 2018 and secured our first ground, which we subsequently expanded. We have a plus 100 kilometre long belt of the West Arunta. And 3 new rare earth occurrences have been identified in this very underexplored area over the last 2 years. We put the first hole into our Worsley prospect, which we reported results early last year. And obviously, topically in the last few weeks, WA1, our neighbours, has identified 2 niobium rare earth carbonatite discoveries in the district. We think this is showing all the hallmarks of the early hallmarks of what could be a new mineral province for Australia. We think it has enormous potential for rare earth carbonatites and IOCG deposits under thin cover. Next slide, please. Now, this is the very first hole drilled into this project, and we completed this hole, and it had exactly what you want to see in a new region if it was the first hole, aside from banging into an ore body. We had elevated copper, moly, gold, niobium, and rare earth elements, exactly the signature that we're looking for when we're looking for an IOCG type deposit. One of the things we didn't know drilling the first hole into a new belt was how deep the cover could be. It was only 5 metres. And this has really serious implications from an exploration perspective, in that we can apply surface geochemical techniques, and obviously anything that we potentially find under this thin cover is going to be more developable. One of the really interesting things was this looked, for all intents and purposes, like the sort of drill hole you drill on the margin of one of those IOCG deposits in South Australia. We subsequently got the granites and age dated or by the Geological Survey of Western Australia, and this is rewritten the geological map out here. It's come back at a similar age to the Olympic Dam, Hilltop Sweet granites with a metamorphic event shortly thereafter. So it is really the same age, a similar event. It's occurring here under thin cover in Western Australia, not under 500 metres of cover like it is in South Australia. We're seeing this geology under 5 metres of cover, and that's really, really important. Next slide, please. So it's just that once we'd finished that first hole and we'd seen how significant that hole was. Now, importantly, the rig broke down on that drill hole. We only drilled 158 metres. The target was at about 300 metres, and that magnetic anomaly that we were targeting. What we didn't have before that drill hole was a gravity survey. So we did a gravity survey last year, and we completed that box in the middle of the slide you can see. That's been a really fundamental data set. It's enabled us to really have an idea on the important structures that are running through this project, and it's identified a number of really important targets, including the Caird target right along strike from the Looney discovery from WA1, which was announced this week. And these structures are really important at providing the deep plumbing required for rare earth carbonatites and IOCG deposits. So that's one of the fundamental data sets that we've collected so far. When we had the chopper in the area, we did this with a chopper. We had the guys copped in for for half a day. They landed on the Shackleton anomaly and tipped 0.5% rare earths off the deck. So look, this is either a very, very, we've obviously been ourselves in WA1 very, very fortunate in our first drilling out here, drilling rare earths and niobium in all 3 drill holes, and being able to sample rare earths off the deck. Or this is a really, really promising area for new discoveries. That's over 30 or 40 kilometres. There's 3 sample points, and they've all got rare earths and niobium and the sort of signature you might find around one of those IOCG deposits, as well as one of the mineralised carbonatite. Next slide, please. So this is just moving from gravity to magnetics. There's a number of fundamental data sets we need to put in place to help guide our exploration. The Worsley targets, you can see how much that stands out, and that's why we wanted to drill that first drill hole. We will complete that drill hole in 2023. We'll test a number of other targets, including Crean, Caird, and Shackleton. We've kicked off an 8,000 line kilometre magnetic survey, which is a fundamental data set to help us refine those targets. And we just recently received a $220,000 grant from the Western Australian government. This from the Exploration Incentive Scheme, which is designed to open up new belts like we think we've got onto out here at the West Arunta. Next slide, please. That's just showing you the belt scale image again, just showing where we're doing this 100-metre line space magnetic survey. We really have been working on this on our core project around Worsley. We're expanding that to the east through this survey, and we'll do gravity and soil geochemistry early in the new year as the activity in this belt really starts to heat up. So that's what we think is going to be a mineral province you're going to hear a lot more about in the next few years in Australia. It's very remote, it's very untouched, but the 3 holes that have been, or the 3 areas that have been drilled so far have all been mineralised. And we think it's very unlikely that that's not the start of something more significant. Next slide, please. So while we've been obviously very busy in Western Australia, we're also one of the largest exploration landholders in the Northern Territory. Next slide. So we control almost 30,000 square kilometres in the Northern Territory. We were very aggressive to secure new ground based off new government data sets provided by the Geological GA. And they've been providing a lot of new data in these parts of the world because you had major mines at Mount Isa and Century and Tennant Creek, but in between you had very little exploration that had been done, and that's because it was covered. So a lot of the outcropping deposits in Australia have been found. What we're really as an industry looking now is to getting under thin cover and finding that same geology and finding the next generation of deposits that's going to be required. So we moved in aggressively. We pegged and secured a number of the best copper anomalies in this data set, also some of the best geophysical addresses. We attracted BHP as a partner into our Elliott project, and Jessica and Carrara were in 2 separate partnerships with South32. So we've got a third of a project being controlled by run by a BHP, a third by South32, and a third is 100% owned ours. And pretty much everyone who's in the copper space is in the Northern Territory looking for copper at the moment. Next slide, please. I'll just talk about one slide, which is our Sandover Copper and Lithium Junction Lithium project. Sandover Copper is where we've mapped a 20-kilometre long outcropping copper horizon. We've got drilling planned there in 2023. And the Junction Lithium project, where this is one of the 2 provinces in Northern Territory that was identified by the Northern Territory Geological Survey as having these pegmatite provinces that are prospective for these lithium pegmatites. Pine Creek is where Core Lithium is developing their Finniss project. The second one is the North Arunta pegmatite province, and we're one of the largest landholders in this district. We've got a very interesting structural position and target that we've identified at a junction, and we're just kicking off exploration there at the moment. Next slide, please. So that's just to sum up. We are a bit different from a lot of exploration companies in that we've got such a large, half of our portfolio is being funded by major mining companies, and we think that's a good way to go about this sort of exploration that enables you to work through the cycles, enable the big companies to provide the sort of balance sheet, technical input and resources to enable you to go after the sort of things that can turn the dial for them. And if they turn the sort of things they're looking for have to be meaningful for a BHP or a South32 or an IGO. And if they are successful, they're going to be very good results for our shareholders. We're going to continue to work up our 100% owned projects in the Northern Territory and Western Australia. And obviously a particular focus in the next 12 months at what's happening in the Aileron province in Western Australia. Next slide, please. So lots coming up. We've got this magnetic survey, which we expect to come back next week or the week after. We've got work going on that to commence at that junction. We've had drilling happening from both BHP, ourselves, and an IGO over recent months, and those results will be reported around Christmas and into the new year. And we're gearing up to be on the ground early in the new year and commencing drilling in the April to June period at Aileron. And our partners will be kicking off their exploration around the same time. So, look, it's a really interesting time coming up for Encounter. And we think that we're at the forefront of a renaissance of new exploration opportunities in Australia. And I don't think it's going to go away. So that's enough from me from this morning, and I'll be happy to take any questions.
Thanks, Will. Looks like you're going to be busy next year. You're kind of spoilt for choice across a massive land holding. Is that correct?
Yeah, I think that's right, Tim. We've just we take a view that you're better off to have the land and then you find the funding to advance it as quickly as possible. If that means bringing on a partner, we do that. If we think we can do it ourselves, we'll do it ourselves. But yeah, it is a bit of it's a big story because we're in some respects we're about 6 companies in one.
Yeah, it looks like that. So with a farm-in, and you touched on that and didn't have time to spend much time on that, but BHP farm-in, how does that work? Yeah, well, we've got obviously our technical team is very attuned at being able to identify new opportunities. We've leveraged off new government data sets, and we then do the early stage work to bring these opportunities to the companies, or we get approached on it by the companies. We then let them fund activities. We design the deal such that we don't want to be contributing to exploration with a major mining company. So we make the earnings such that they're spending enough money so that if we're being asked to contribute, they've found something. So in the case of the BHP deal, they have to spend $25 million. And if they spend $25 million, I think the likelihood is that they have found and they're onto something. The South32 deals, there's 2 deals there. They're both carried through to a scoping study. So they have to provide us with a scoping study, which will require a mineral resource, and then we'll make a decision as to whether we want to fund or we'll go to a royalty. So that's the sort of structures we have. We want to make it easy for partners to come in to spend their money as quickly as they can, and then if we get to if we have success, then we really do want to partner into production with one of these major mining companies. And just finally, and they are significant names in regards to your partnerships. Now, rare earths, we've seen a lot of gold companies focus on rare earths, but from a funding perspective, it's a way off compared to the sort of assets and partners you were talking about then. And ironically, rare earths actually aren't that rare. So what's the sort of funding pathway look like? It seems to be an area where the macro tailwinds are there, but the funding doesn't get spoken about a lot.
Yeah, well, I think rare earths has probably changed a bit in the last 5 years, and just the fundamentals of the government support that you're seeing going into the rare earth developments, both in America and in Australia. And I think that's another source of funding that wasn't available 5 or 10 years ago. I think these are, rare earths are of national significance. They're fundamental to so many technologies required. They're on the critical minerals list for most of the European countries, the US and Australia. So I think what we're seeing now is that the market is starting to wake up to the opportunities that are emerging in rare earths. As you say, they're not geologically all that rare, but finding one that makes money is much more difficult. And one of the things out of those, these IOCG deposits in South Australia, Olympic Dam, there's a lot of rare earths in these IOCGs, and I think going forward you're going to see that copper development with a rare earth byproduct is a very good opportunity.
Well, that's all we have time for. Really appreciate your time. Fascinating story. Congratulations on those partnerships.
Thanks, Tim.
Now we're going to welcome back IOU Pay. We've got Paul Russell back with us, I believe. We'll start back at the beginning. Paul, are you with us? Doesn't appear so at the moment. Here he is.
Hi,
Paul,
Tim.
thanks for your time. We'll start at scratch and go from there. Thank you.
Yeah, great. Well, thanks for having me today, Tim. The presentation today is largely an extract from our business strategy update, which we announced on the 21st of July this year. So if we just start on slide number 3. IOU Pay is a fintech business listed in Australia, but based in Malaysia, operating for nearly 20 years, providing secure digital payment processing for banks, telcos, and major corporates in Malaysia and Indonesia. The company is focused on large communities of low-risk consumers and merchants, which has led us to establish a highly scalable, market-leading BNPL platform servicing Malaysia and seeking to expand into the Southeast Asian region. Our goal is to be one of the leading digital transaction processors in the large and growing cashless economies of Southeast Asia. Next slide. Over its 20-year history, the company has established a number of core capabilities that set the foundation for successful growth. We have developed a trusted and secure technology platform, a highly targeted customer acquisition plan, and specific digital marketing strategies. We have a sophisticated credit and risk management system and an experienced senior management team with expertise in wholesale debt funding, corporate finance, and M&A. This has led us to a number of highlights and achievements over the past 12 months. Next slide. IOU's base business continues to perform strongly, reflecting the fundamental shift in consumer behaviours towards digital transactions. There are now over 350 million digital consumers in Southeast Asia, and this number continues to grow. However, credit is difficult to obtain, which is providing opportunities for BNPL and other consumer finance products. As a result, the company has launched its My IOU BNPL service in June 2021 and made a strategic investment in IDSB, one of Malaysia's largest finance companies. IOU Pay is focused on product innovation to maintain market leadership, provide access to new customers, and to develop new revenue streams. Next slide. The business is very much focused on a measured approach to sustainable growth. The credit markets in Southeast Asia are far less sophisticated than Western markets like Australia, and a more conservative approach is required. We know what works in Southeast Asia, having operated in the banking and digital payment space for nearly 20 years. Next slide. The market opportunity for BNPL in Malaysia is large and growing, with gross merchandise value in 2021 of $287 million, and is predicted to grow at nearly 50% compound annual growth rate. Our current market share is 4% by volume, with a medium-term target of 10%. 45% of Malaysia's population is serviced by banks, and our target market is the top 2/3 of that. Next slide. We are currently operating in Malaysia, but our goal is to expand throughout Southeast Asia. The region's economic growth and uplift in incomes, along with high adoption rates for new technologies, is providing significant opportunities for creative fintech solutions. Next slide. Central to the company's strategy is establishing relationships with partners who manage large communities of merchants and consumers. Partnering with payment gateways facilitates efficient acquisition of merchants and streamlined technology integration. Our partners' interests are aligned with the company, providing additional oversight and management of merchant performance. In September this year, the company announced its first collaboration with a major Malaysian retail bank and is working to further leverage its relationships with the finance sector. Next slide. Product development is key to maintaining market leadership and generating new revenue opportunities. The company has developed a number of initiatives over the last 12 months. The co-branded My IOU Cash Plus Visa prepaid card is a potential game changer for My IOU. Once integrated to the My IOU platform, it will allow consumers to make purchases anywhere Visa is accepted and then convert those purchases into instalment payment plans. The key objectives of the initiative include to provide access to many more merchants, to drive growth in new consumers and enhance brand loyalty, and to generate additional revenue streams via potential future product enhancements. The rollout was launched in July and it's progressing well. Next slide. Another enhancement to our product capabilities is obtaining certification for Sharia compliance, which is preferred by the large Islamic communities of Southeast Asia. In July, certification was confirmed and a partnership agreement was signed with Pay Halal, a Sharia compliant payment gateway. The company's first Sharia BNPL transactions were processed in early September. Sharia compliance and Islamic finance product capabilities provide a number of strategic growth opportunities. It opens access to new communities of consumers and merchants, positions the company to develop opportunities with Islamic banks and NBFIs, pre-positions the company for territory expansion into countries with large Islamic populations, and more broadly diversifies the company's offerings across the regulated credit markets. Next slide. The other major strategic initiative over the past year involves the investment in IDSB, which has resulted in IOUpay acquiring a 34% stake in that business. iDestinasi, or IDSB, is a specialised finance company established for over 40 years in Malaysia. IDSB is a consumer loan processing agent for banks with civil servant customers. In Malaysia, there are approximately 1.5 million civil servants. IDSB has a unique collections capability with its customer base that effectively eliminates credit risk, providing it with a competitive advantage over traditional lenders. The investment has compelling fundamentals with a unique competitive advantage, low capital needs with long-term recurring revenues, and significant growth potential. More importantly, the investment in IDSB has been made with the bigger picture in mind. It opens access to IDSB's high credit quality customers, and it broadens the base of consumer finance and collections capabilities to meet IOUpay's longer-term vision as a leading payment processor with diversified revenues. Next slide. Since we made our initial investment in IDSB, we have continued to collaborate and in September announced a strategic partnership agreement. This is all about leveraging the close relationship with our investment partner to unlock commercial opportunities for diversified growth. We've already got our first project underway under the agreement. It is a local market first, short-term bridging loan product for new federal government employees. Strategically, the bridging loan will help secure customers for IDSB, and both companies are set to benefit. This is the first of what the company believes will be a series of initiatives to develop a broader base of consumer finance offerings with recurring revenue streams. IOUpay benefits not just from the new products, but also via its strategic shareholding in IDSB. Next slide. Based on the presentation I've been through today, IOUpay has a clear established pathway to profitability. The first year from launch of the MyIOU BNPL offering was about building the base of merchants and strategic partnerships and improving the product model and credit risk framework in the Malaysian marketplace. We are now well into the second phase and seeking to build critical mass with interim debt facilities and preparations for expansion into a second jurisdiction in Southeast Asia. Phase 3 will be all about scaling up with expansion based upon wholesale debt funding and growth across jurisdictions with innovative product offerings. In summary, IOUpay is a well-established fintech operating in the high-growth markets of Southeast Asia with a range of product opportunities to drive the business expansion going forward. Thanks for your time.
Thanks, Paul. A few questions here. Just going back at the beginning of COVID for us, we ran a Buy Now, Pay Later webinar. It was the biggest webinar we ever had. We had over 1,000 people online, believe it or not. Mm-hmm. And since then, the sector's been hit. The industry's been hit by talk of competition, regulation, funding issues, etc. How's the perception of the industry in Malaysia, and how is sentiment going to change here in Australia?
Well, IOUpay is a lot more than just Buy Now, Pay Later. We're looking at all forms of short-term consumer finance, and particularly instalment plans to comply with Sharia requirements. So there are issues in terms of the public perception of Buy Now, Pay Later. We believe that our business has been set up in a way that, and our product lines are established to be as very fair and reasonable to the consumers. We're targeting high credit quality customers, working with strategic partners. So we're not going after top line growth, seeking to just generate large revenues off the back of high volumes of unsophisticated borrowers who may be extending themselves. So we're very particular about our product structures and the customers that we're targeting. There is some significant growth in the region with the product generally, and the regulators in Malaysia are looking to establish a new Consumer Credit Act. And the intention, I believe, is that Buy Now, Pay Later will be brought in and regulated within that Consumer Credit Code. We welcome regulation. We believe that'll be good for the sector and the product set. We believe that the products that we've got are going to suit and fit within the anticipated regulatory frameworks. And just as recently, Singapore has brought out some guidelines in terms of how BNPL should operate. We've been through those, and we believe that we comply with those. So we think we're well positioned to move forward in light of competition and regulation.
Thank you. And there's a question here: is the digital banking space a pathway you'd consider?
Well, we've got a long history in terms of digital payment processing, authentication of digital payments. So we've got the relationships there. There's certainly potential for us to be involved in that space. As to the exact nature of our role, at this stage, it would be around the fintech solutions rather than the full service lending proposition.
And what about the cost to acquire customers? That seems to be one of the big impediments to the Buy Now, Pay Later space. It seems to be expensive. How do you manage that?
Well, I think that's where our focus is on strategic partners, accessing customer sets through those routes. And that's how we, in terms of efficient access of acquisition of merchants, but also consumers. So recently we announced a partnership with Bank Simpan Nacional. It's a large retail bank, and collaborating with partners like a retail bank, and also our investment into IDSB to access high credit quality customers certainly lowers the customer acquisition cost.
And Paul, just finally, what's the pathway in terms of time frame look like to profitability?
We haven't announced any forecast on that, so I won't do that here now. But we've certainly got a clear path in terms of the milestones that we need to hit. The portfolio's generating cash, and we believe the product model is working. We've got our strategy of targeting strategic targeting of customer communities, consumer communities, is working in that our credit quality is good with a low non-performing loan level. It's still modest, and so that's sort of one of the main metrics that we monitor. So we're all about now that we've been proving up the model and the business framework, we're all about now looking to build scale, and that's what's going to get us to the that break-even point and beyond.
Great, Paul. That's all we have time for. Appreciate your time. We'll catch up with you probably next year. Thank you.
Thanks very much, Tim.
Thanks, everyone. That's all we have time for. Enjoy your weekend. I believe the sun's out, maybe not in Melbourne, but we'll see you again next week. See ya.